We just finished an incredibly volatile week with the price closing on Friday at the high water mark for the week. Yet some sectors are stronger than others. Let's see what the winners and the losers are in today's market. Welcome to the Ready Set Trade Market Minute for Sunday, the 30th of October. I'm going to start out by looking at a weekly chart of the Dow Jones Industrials. Now, these are the blue chips, the 30 stocks that represent a lot of market capitalization in a lot of different sectors. And I was really shocked to see how strong this was recently, especially this week. If we do fib retracements from the top of the year, the very top of the price, to the very bottom of the year, which was just 3 weeks ago after that CPI print, you can see the prices reclaimed 50% of the entire haircut. Now, the Dow was down about 22.4% for the year from tip to tail. So it's already reclaimed 50% of that after just 3 weeks of price movement. So that's an incredibly strong move. Now, we know that bear market rallies can be very strong, but we need to watch as to whether or not the Dow is able to reclaim the price territory above this trend line. So we know that descending patterns will eventually break to the upside. Is it time yet? Or are we going to see rotation from these extremely strong sectors that are driving the Dow into ones that are weaker right now? When we compare this against the NASDAQ 100, it's not like we're even looking at the same market. The NASDAQ has dropped 37.7%. So these are the former leaders that were pushing everything higher into the end of 21. And especially during the pandemic recovery, and are being punished right now. And if we draw those fib retracements from the top to the bottom, we can see that we've not even reclaimed 23.6%. So the NASDAQ is being punished right now and is pretty much looking hopeless at this point, seriously well under that descending trend line on the weekly chart. So let's go through the different sectors of the S&P 500 to determine which are the winning sectors and which are the losing sectors as we get into the last 2 months of the year. Now, to set the table with this, I'm going to go straight to the S&P 500. We're going to do the same thing here. We're going to draw those fibs from the top to the bottom. And we can see that right now the price is in between the 23.6% retracement and the 38.2. So it's kind of in between the two, but certainly nowhere as strong as the Dow Industrials. I'm going to bring up a couple of graphics now for sector performance. Year to date, we can see that really energy has been outperforming everybody else by a wide margin, and we all know the reasons why. But when we compare that versus 1 month, all of a sudden we start to see a lot of other sectors starting to pick up the slack, as well as the fact that some of them are still negative for the year, such as communication services, discretionary, and utilities. Let's start with the materials sector, XLB. I just want to do some quick fib analysis on these to see how strong they are off the bottom. Kind of where the S&P is between 23.6 and 38.2, still below the descending trend line. So materials has a long way to go yet. Next up is communication services. This is an important sector in the NASDAQ, and you can see how relatively weak this one is. This is terrible. This is being driven primarily by Meta, formerly known as Facebook, as well as Google. Those are two of the top holdings in the XLC sector, and both have been underperforming lately, especially even after this week's earnings. You can see this week has been particularly weak here, although pretty strong descending trend line, which could be easily broken. So there's a lot of potential for short covering on this one if there is any positive catalyst. The next sector is XLE for the energy sector, and you can see that since the beginning of 22, approximately here, that this has been performing very strongly and is fairly close to the highs right now for the year on the energy sector. Pretty easy to see this is our main winning sector for the year. Next up is XLF, the financial sector. And you can see that the price has come up to the 38.2% retracement. and right at the confluence of that and the descending trend line since the beginning of the year. So very important inflection point, and it would not take much to get this to squeeze above there and start to take out the former lower high on the weekly chart. That would be a very powerful signal should the XLF break above this descending trend line and start to attack this lower high and turn that into a higher high. That would be part of the reversal process that we'd need to see for the financials to start a turnaround. So watch that carefully. Here is the XLI for the industrial sector. And drawing the fibs on this one, we just had an enormously strong week for this, well above the 38.2, almost at the 50% retracement, still below the descending trend line for the year, but showing an amazing amount of momentum. We just recently had earnings from Caterpillar, which really drove the industrials much stronger. So this is a relative winner, I would say, of the sectors. This has not declined all that much and is relatively strong over the last 3 weeks, coming straight up over the last couple here and threatening to take out this descending trend line as well as take out the lower high, which was in early August. Next up is the XLK, and this is technology. This is the technology sector, and this is going to be essentially the same thing as the NASDAQ. It has reclaimed the 23.6 retracement for the last couple of weeks, but still way below the other winning sectors and still very negative for the year. The NASDAQ itself is down 37.7%. I'm sure the XLK is a very similar number to that. So still negative, however, a lot of potential to squeeze in the short term. Could we get some rotation back into the XLK, even if it's in a bear market? The answer is always yes. Next up is the XLP, which is the consumer staples. And this one's a bit of an odd duck because initially into the spring in April, it set a new high for the year. Now from that high for the year, it is actually down. So we're going to measure those fibs. And right now it's in between the 38.2 and the 50% retracement, and it's showing relative strength. I think we'd have to call this, even though it's slightly down for the year, it's going to be one of our winners, purely on a relative case, of course. Next up is the XLRE. This is real estate, one of the newer S&P sectors that are out there. And this one is once again weak, as you might imagine, with rising rates and mortgage rates going straight up. The demand for housing has fallen off the cliff because people don't want to get into a mortgage at 7-8% when they could have done so 6 months ago for maybe 3 to 4%. But still, you could see the potential for this one to rocket higher if there is any kind of language from the Fed showing any kind of moderation in the pace of rates. Next up is XLU, the utilities. And again, another weird one because up until recently, this was the highs for the year back in September and has recently gone through a pretty rapid drop in the utilities. And I think a lot of this is because rates are rising everywhere else and utilities were attractive from their dividend perspective before. So not nearly quite the case for that anymore, but it has bounced up from the bottom to nearly a 38.2% retracement. Hard to know what to call this one as to whether or not it's a winner or loser. It is still down for the year slightly though. Next up is XLV for healthcare. This one, again, another oddball because it did set a relative high back in April. That was a higher high for the year. And since then, it's gone through a little bit of decline, but it's already claimed more than a 50% retracement. I'd have to call this one a winner so far, especially with the recent performance and very strong week. And last up on the list is the XLY, consumer discretionary. And this one is one of our losers. We've had a relative low here, retested the lows into October and is barely off of the bottom after some pretty rugged earnings reports from Amazon and Tesla over the last couple of weeks. So they're having difficulty getting off the ground. Certainly a lot of potential for these to squeeze to the upside if there's any rotation happening or if there's any good news or catalyst coming from these. But after earnings, usually that's the opportunity, and they swung and missed on most of the bigger holdings in this sector. So there you go. There's the entire 11 sectors of the S&P 500. And you can see which ones are the current winners and the current losers. Now, just because a sector is a current winner doesn't mean it's going to continue that way. Just because a sector is a loser does not mean it's going to continue that way. However, I do like some of these, like in particular, healthcare looks really, really strong, because this to me is just a bull flag, really. It's more of a bull flag at the weekly chart basis, and is consolidating really nicely and building up a tremendous amount of energy, showing a lot of stability. So to me, this is like a winning sector that should stay strong going forward. So the opportunity is obviously going to be in some of these weaker sectors to see if there's any kind of a rotation back into them. But to me, a chart like XLV typically will keep strong going forward on something like this due to the stability, and the energy coiling up from this one could see quite a squeeze into this one going forward. All right, that is it for today's Market Minute. Hopefully that helps to let you know what's happening across the board. Can't wait to see what the Fed does this Wednesday. We'll report back when that happens.